The Allianz Technology Trust invests in technology, broadly speaking. I often get asked, where does that start and stop? The world we're living in today, I like to think of our investment is in companies that enable things. So we could go outside of those bounds, but we traditionally haven't. Our goal is really to focus on secular themes, and within those secular themes, we tend to identify companies that are really focused in the mid-cap and large-cap space as they're growing their business and building their market share and barriers to entry. That tends to be where we focus on, and that tends to be the focus of the trust. Our process is really one whereby we look at a mosaic, and that mosaic requires us to not only talk to companies, which we do, but also really to go out and talk to users of the products, talk to competitors, do a lot of listening to chief information officers, chief security officers, understanding on the semiconductor side, what manufacturers or what equipment companies are gaining market share, losing market share, et cetera, et cetera. But ultimately, we take that variety of inputs, which are very qualitative, and we need to be able to quantitatively reflect that in our model and be able to understand what is the opportunity for that investment in terms of what do we think about that particular business and what it's going to do over the next, call it, 18 to 24 months. The risk is because we are technology only, we obviously have a high correlation to what the technology market does broadly. The interesting thing today versus 20 years ago when I got in the business is because of the breadth of technology, we are able to identify a variety of stylistic characteristics from a company perspective, which basically afford us the opportunity to create a portfolio that is diverse. Diverse from a style perspective, for example, not wanting to have too many growth stocks, not wanting to have too many value stocks, but the industry and the universe that we're operating in has become larger and larger. It's easier to create that type of ballast, for lack of a better word, for our investors. So they do have direct exposure to the sector, but also some diversity from a stylistic perspective. ESG has become increasingly important in my career. And, the ESG aspect of the trust, I often say they have a seat at the table along with everybody else. Like most organizations, it is a separate entity, like within the company, in that as a portfolio manager, not surprisingly, I could be really biased towards a company that I thought was a great stock that had terrible ESG, but that isn't the case because it's a separate entity. And then I interact with that group, but just so you know, ultimately the vote comes from the ESG group because they are a separate entity from investment management. So we do not use gearing. We took over running the trust in 2007, and we've never used it. As I mentioned, I've been working on it since 2009. I kind of have a core belief that the technology sector is volatile enough, and if we added gearing to it, it may just only increase the volatility. But the answer is no, we do not use gearing. Secondly, with respect to discount policy, the board does have an active discount management policy in place, and we've been fairly aggressive on doing share buybacks with respect to when we thought the trust stock, when the price of the shares appeared to be a strong value for us. With respect to just how does this fit into an investor's portfolio, I like to think of the trust as something additive to somebody's overall portfolio, in that they may have some given exposure to technology, but this really speaks to the active management side of the business. So things like cybersecurity, where active management is really paramount. Looking at those kind of mid-cap, large-cap companies that aren't the everyday names. So, I often think of it as, a portion of someone's portfolio, but I would never advocate that we would be 100% of someone's overall portfolio.